What's going on, everybody? Michael Silva here. You're watching the Stock Market Brief Show. This is the show that we use technical analysis, intermarket analysis to get a good idea as to where the market might be headed next. Market is getting wobbly. We all know that. Everyone's sitting on pins and needles, waiting for what the Fed is going to do around tapering. We got a lot to talk about on today's episode. I'm going to give you some things that I see and kind of my thought process going throughout this week. Let's get into it. Welcome back, everybody. This is the Market Dashboard. We're going to start here and then roll through these charts. I'm going to try to keep today's episode pretty quick. Look at nothing took place today, right? Pretty flat overall across the board, right? No big moves like we saw yesterday. We saw a trend day yesterday, right? It gapped down. We had that follow through trend to the downside. Today was a range day, a period of consolidation and a lot of chop and uncertainty leading into that Fed meeting. What's on people's minds? Well, this volatility is still relatively high, so that is something that we'd be very mindful of. It's nothing that you want to just start getting all crazy about right here. Like, right? Are you going to start buying these dips right now? We could get a rubber band snapback. That's always a possibility, but there's a lot of uncertainties out there, right? We just broke a trend line in the S&P 500 that lasted about a year, even more, okay? So there are a lot of uncertainties, so we need to be calm, be patient, don't do anything crazy, and let's see what comes and how the market interprets this data coming out here or what the Fed is going to be talking about tomorrow. Here's my thought process. S&P 500, we broke down through this rising wedge. Clearly, it had some technical implications. Saw some big move in volume, but that was, the rollover, VIX, blah, 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 blah. Option expiration, quad witching. And we tagged the 100-day moving average. Today was an inside trading day. So we got to see what takes place here. Like, keep in mind, there's a very strong possibility during this seasonality of rising volatility, we might not even go tag this next high. We might not be able to get up here for a month and a half. I mean, that's a possibility. But what I want to call out here is just how powerful the markets can move and how quickly they can move. So let me just put this into perspective. All right. Looking at the SPY, within literally a very short period of time, pretty much one big down day or two big down, this day and this day, we took out in a very short period of time and went all the way back and tagged the beginning of July's close or the beginning of July's open right here. That's a very, very aggressive move, right? So most people are like, fine, up, they bought the dip, yeah, everything's fine, it's fine, and bam. That just goes to show you stairs up, which we've been thinking this is a big, strong move, elevator down. Things can get very dramatic, and when they get dramatic, they can happen fast. So on a day like this, leading into the Fed, after breaking these trend lines here, yeah, just be calm, be patient. We're still above the 100-day. What I can see potentially happening is, as we're overextended by all means to the downside because we got overextended quick on this move. Potentially we go rip back up, okay? Bear markets, when they start, they have incredible rallies. Just rip your face off, tear off the limbs, and just go straight up in the air. Okay, so I wouldn't be surprised to see something like that go to 4,500. But what if it goes up this way, retags this, and then that's that potentially trend break, retest, doesn't put in a new high. That would mean that we have a high, a lower high, a low, a lower low. So it could be potentially the start of a trend changing, but we're not there yet. All right, that's why I'm saying let's just be patient. All right, 15-minute time frame is kind of flagging actually right here. So we'll see what happens in the overnight session, but we had this very tight wedge forming. We broke out of that going into the close of yesterday, and then today was range day, right? We gapped up, which we kind of suggested there was going to be some sort of bounce. Right? A lot of the indicators were overextended, but the market was faded on open, right? Or almost on open. So it basically gapped up, ran a little higher, and then we consolidated sideways. Let me tell you something. If this market is going to continue to fall, that means that big tech, all the FANG stocks, they're going to have to fall. If they do not fall, so pay attention to what they're doing on an intraday and daily basis. I'm talking NVIDIA. I'm talking Microsoft, Apple, Facebook, Amazon, those ones. And I probably am missing some. Tesla. This is all shrunk. I don't know why. Let me fix that. Here we go. This right here is just a quick little indicator that I wanted to show. The XVG value line geometric index also broke. So this was in a negative divergence. We've been talking about the negative divergence for how long, and how many people have been saying those don't matter. It doesn't matter nowadays, right? Well, it only matters when it matters, and when it matters, it happens fast. Like I said, right, we gapped down and we took out pretty much everything up until July, and if we go down further, that even just go to show you that they matter even more. But what I want to call out here is the XVG broke down through this trend line. We retested it today and headed lower, so it needs to recoup and get back into this and potentially recapture that 50-day moving average to really help out the S&P 500. Okay. Now, another thing to watch out for is the NYSE. This is this McClellan summation index. We're still below zero, and we're heading down further. Now that it's below zero, the indicator that I really want to pay attention to is the 9-month. This is the NYSE McClellan oscillator. This is bouncing, right? We talked about the positive divergence. We basically gapped up, or on the New York Stock Exchange, we actually opened up pretty much flat, and then we rallied up higher, and then we came back down, and we didn't really move. We were up slightly on the day. But the positive divergence is still there, okay? However, what to watch for is if this remains below zero and this comes down to around minus 300, things can get wacky and wobbly very quickly. Be careful. Next one, Dow Jones Industrial Average, relatively unchanged. We had a nice strong rally and it got completely flipped on its head, so the bears stepped up into close. We're still pinned right there in the middle, all right? So pretty bearish looking price action. The MACD, or that's not the MACD, the PPO, price percent oscillator. This is not something that you just want to just jump into. I mean, this is below zero. It's pointing pretty much completely south. It's and the histogram here is upticking. So just wait. Just like be patient, because this can easily come tag down here to 200, right? It can come tag even this lower trend line, and that's a full megaphone pattern, right? It come bouncing around, and then we come down here and retouch 32.5. It's a very strong possibility, and we mapped out those key levels yesterday on yesterday's video. Okay, I'm gonna keep moving on. DIA potential bull flag. However, short-term trend is still down. We're below the 5-day declining moving average. Okay, so the wind is blowing at our face right now as we try to walk up a mountain top. It's very hard to do so, so you want to make sure you're waiting to go long and or playing the trend, which it would be technically short. So it'd be when you get strong moves to the upside, you fade it. So came up to the 5-day, faded. Came up to the 5-day, faded. Come up to the 5-day, faded. Bam! There's the big move. You definitely would have taken some profits right there. Came back up to the almost the 5-day, faded. Okay, so and by faded I mean you're taking an opposite approach. So if you're going long, right, you would want a very steep move to the downside, and then you consider that a fade by trying to play a bounce. Or if it comes back up, now you want to play with the trend. The short-term trend, if you're an intraday trader, is obviously bearish, right? We had this big gap down, and we're still below the 5-day declining moving average on the 15-minute time frame. NASDAQ, also inside trading day, okay? So it's just could be a pause before a big move in either direction. This being that this is a hammer candle and inside trading day, this is going to be an important one to watch. The NASDAQ 100, the Qs, like I said, big tech. See if we can get above the 50-day, back above the 50-day moving average. This prior support now is acting as resistance. This, I like how this finished today. This to me looks like it'd be bullish as long as it gets above the high of today's candle or slightly above that. And the high was 15,139. Okay, so if we start getting back above that and we start seeing strong volume intraday, there's no reason why we can't come close this gap at 15,300. Just keep in mind, okay, during the rising volatility season, if we don't get a strong move back up to the upside, who knows? Like, we don't know yet. Obviously, you can't predict that. I mean, you can predict it, but what's the point of predicting something when no one actually really knows what's going to be taking place? You can just prepare, okay? It could be a while before we get back up on here. I mean, just look at the price percent oscillator. That's also coming straight down. The histogram, boom. So why are you gonna chase into that? Right? It's been diverging for quite some time. All right? And the market's continuing to press higher. And like I said, it matters when it matters. And now it's starting to matter. So we just need to be patient, be calm, be cool, be collective. The Qs on the 15-minute time frame, short term, bearish, right? 5 days declining. You can fade those pops, and it's potentially forming a little flag right here, but it's in bearish context. So yeah, we might get a pop, we might get a rip higher. What you want to see, like I've been saying, 5-day moving average, you want to start seeing it flatten out, and then all of a sudden start turning up, and then we'd feel a little bit more confident. As far as a long hedge goes, I'd start looking at the IWM. Okay, first off, why? Well, it's been trading sideways for 5 or 6 months. I don't care if you hear people say this is distribution. If they say that it's distribution, they don't know if it's distribution or if it's accumulation. Okay, so if people are saying this is distribution and we're going to crack down and fall and crash, they could be completely wrong. They can be completely right. We don't know. You don't know if this is distribution. You don't know if this is accumulation. We don't until we actually know. All right, if it breaks to the upside and we see force, guess what? This was accumulation. If it breaks down, distribution. What I'm looking for right now, I don't have it up. This is the moving average, the 200-day. Bring up the 200-day exponential moving average, and I believe that we're slightly lower, and the price has tagged it here, here, and I think we're just right around this range here. So if we start pulling down into this 211 to 215, that could be a potential opportunity to quote unquote fade, right? Range trading, right? If you shorted here, congratulations. If you shorted here, that'd be fading, congratulations. And then if you're buying the dips on these moves down, buy, you played the fade move, right? You faded back up to the middle of the channel, took profits, and or you tried to wait to see if it could come back up to the top. When you look at this range, just put a line through the center of it. All right, and if it gets extended, basically what you're thinking here is like it always reverts to the mean, right? So if it gets extended to one side, it'll come back and revert to the mean. That's what it's been doing. Eventually, it won't work. That will break, just like we saw like the S&P 500 going to the 50-day, bouncing. It even did it this time, but then it completely reverted and we gapped down and we went down lower. Okay, so back to the mean. So if it comes down here, that could be a hedge long. And if it can reach back down to here, it might not. That could be a hedge long that offers up a good reward relative to what you'd actually be risking, because your risk could be minimized by just having a stop loss outside of this trading range. All right, keep continuing. 15-minute time frame. Bearish context. 219 is an area of resistance that kind of lines up here with the 5-day declining moving average. But I do want to call out the PMO is trying to get back above zero, and the bulls have been obviously stair-stepping, boing, boing, making progress to the upside. So you can see the 5-day is kind of declining right here. That can change very quickly, obviously, if price doesn't get above the 5-day moving average. And if you want to have the 5-day moving average on a 15-minute chart, just apply the 130-day moving average. Now, let's get into some BP charts. This is what I mean by things are oversold. Bam, BP SPX, look at the RSI, oversold. It's getting extended, right? Dow Jones Industrial Average. This is the BP INDU. Our reading is dang near pandemic lows. Not quite there, but actually, it's actually right where the dip before the pandemic took place. That's where it's at. So, and clearly we recovered from that, but then we ended up falling further. But it's a very overextended reading to the downside. BP NDX, same thing. We're getting overextended to the downside. These things can produce bounces, okay? So it's not the area that I would short. Looking for a short right now, you can get lucky. But personally, I would want to see the market rally and maybe come back up, like I said, and test an area of that was previously support that now could be resistance, and then apply a short position. But when things get moved way to the downside, why would you just short into that? Like, you know, because then I don't know. It just doesn't make sense to me. It just doesn't make sense to me. I mean, you can make sense of it if on, you know, whatever time frame that you're using, but I don't want to short a gigantic move to the downside at the very low. All right, BPGDM. This is actually just gold miners index. This is actually oversold too. This is I shared on my Sunday video when I talked about the gold and silver and the dollar. But yeah, just a lot of oversold charts. TLT. Here's one that's still floating sideways, not giving us much. Hey, if this thing starts moving to the upside with some force, you know, and the dollar starts moving up with some force, that's a fear trade right there, in my opinion. People are getting out of risk, trying to risk off a little bit, and we start to see these assets right higher, which we've seen these big moves to the upside. They produce movements to the downside in the S&P 500. And I mean, this broke out of a symmetrical triangle. We're still kind of flagging, could be an ascending triangle, kind of going sideways, but a full measured move of this can bring us, like I said, to 156, potentially even higher. And if we get a forceful move out of that, well, yeah, I mean, it's very possible to see the SPY, the S&P 500, continue to roll itself over. If you look at the TNX, right? So when these go down, when it falls down, that means TLT is going to obviously, the bonds, it goes up. Okay, inverse, they work inverse of one another. The PPO on this looks like it's having a bearish crossover, and it's still right above zero, but it looks like it's kind of waning right here. It's really just contracting right here from an expansion. Expansion leads to contraction. Contraction can lead to expansion. So we're looking for a break out in either direction. And right now, I mean, short-term bearish, right? So it's been moving down since March, heading lower. Meanwhile, bonds have been going up since March, potentially pricing in something, right? We don't know what it is, but as of right now, it's been going sideways, hasn't done much action since July. So we're waiting patiently to see if something breaks out to give us further confirmation as to where to start positioning ourselves. The dollar was red on the day earlier, but we created a long lower wick. Bulls bought it right back up, and that forced, which we were seeing a decent day, a decent comeback, got completely reverted on the S&P 500 and other indices. All right, but we're still not out of the woods yet. We broke this trend line. Okay, we retested the trend line. Now we're going sideways. We're still just below this area of resistance. So if we don't get above resistance, guess what? That ends up being a fade. We'll probably start sinking back lower, which sends markets and everything like commodities up higher. So we're just at the brink of something big here, but we're not quite there yet. And it just seems like we're waiting to see what the Fed does and then see how the market anticipates it. You're going to see the market react in a certain way. And a lot of the times the market acts in one way and then changes that direction very quickly. So don't just go off as soon as the market starts moving, go into that. Give it a little time to digest. Sometimes it takes a day. Sometimes it takes 30 minutes, right? Sometimes it takes a week. Let the market digest what's going to come from it. Let's see what the news is around tapering. I don't think they're going to do anything to make the markets get hurt. However, the only thing that I'm like in my head, which I shouldn't be doing this because it's just a narrative, but it's like they exited their positions, right? And they're like, yeah, because of ethical concerns. And now all of a sudden they're going to be like, yeah, perfect time to taper. And then all of a sudden the market responds in a very poor manner. But I don't know. I think it's a long shot. That's all I got for you guys on today's episode. Hope you have a wonderful night, and I'll see you back tomorrow.